Why don't we just get started and whoever's coming in can just come in automatically. So first of all, thank you to everybody who's logged in. And this is another one of my educational events that I have, as you know, and I know from the names that you've been to my events in person. So thank you for coming on Saturday morning today. I'm excited today to introduce Sebastian O'Connor, who is going to speak about investment opportunities from Equiton. And I know I've spoken to both of you about it. So I'm going to let Sebastian go from here. If anybody has any questions, the chat box is open and I'll monitor. And if we need to stop and ask, I'll do that. But we'll have some time at the end too if you have any questions.
Appreciate that. Thank you very much for the introduction, Mandeep. And I appreciate you people joining in. I know it's Saturday morning, so congrats on taking the time to learn some information here. Before we get started, just a little introduction about myself. Like Mandeep said, my name is Sebastian. I've been in the financial industry for over 5 years. Started as an investor as well. Since I was 18, I've been able to invest in various equities and stocks, mutual funds. But really, my love comes in real estate. I was able to get my first rental property at the age of 2022. Sorry, at the age of 22, with one of business partner. So naturally, my love of real estate brought me to Equiton, where I can provide the same sort of investments in a passive manner to a lot of more people. And that's really what we'll be talking about. What we'll be talking about today, the agenda really, it's going to talk about the history of Equiton, who we are, give you an idea of our background. We'll also talk about the industry that we work in because we are a private investment, something that might be new to a lot of people. And then we can briefly talk about the investment opportunities that we have and hopefully shed some light on this new investment types. And like Mandeep said, at any point, if you guys have a question, feel free to put in the chat box and hopefully we can get some conversations here. And I'll get started. Just want to make sure you guys can see my screen. Is that correct, Mandeep? Perfect. All right. So who is Equiton really? We are a fully integrated real estate investment firm. Now, we had our humble beginnings back in 2015. There was the three original founders of the firm that started with an initial investment of $1 million. Now, back then in 2015, that initial $1 million allowed the firm to purchase their first property, their first income-producing property, and it was a three-story building in Stratford, Ontario. So that was the humble beginnings that the firm started with. But now, fast forward over 9 years later, we've been able to grow to over $1 billion in assets under management. We now employ over 200 people across Canada and have been able to help over 15,000 investors to date. So it's really been quite the growth trajectory that we've seen. From what you see on this chart as well, some years we've even doubled in size. So we're very, very proud of that. We've worked very hard to get to where we are. And truly, it comes down to the effort that we put as a whole organization. Now, I mentioned that we are fully integrated, meaning that we take care of all aspects of operations, from raising capital from investors to acquiring the properties. But not only that, once we acquire the properties, we are the ones managing the properties as well. So everything's done in-house. It allows us to have much more control of the properties, and provide a better experience as well for all of the tenants and stakeholders that we have within the firm. Now, one thing to note is that we are a private firm. So this is something that might be new to some people, maybe not. But just to give you a brief overview of what a private investment is compared to a public investment, for example, when we talk about these two sort of investment strategies, the public investments may be something that you're familiar with. Think about your stocks, your mutual funds, cryptocurrency, if that's what you're into. All these type of investment vehicles, they are listed in a stock exchange or in a market, right? And that market is primarily driven by buyers and sellers. Now, those buyers and sellers, for the most part, they do drive with a lot of emotion, right? If some good headlines come up in the market today, the market can rally. But if similarly, if some bad headlines come down tomorrow, they can go down as well. So you are left with that fluctuation, right? You can be invested into a very profitable company, but if the market's not doing so well, then you might be seeing those negative effects as well. Most recently, we saw the pandemic. That's a great example of a market that just went downhill. There was a lot of wealth erased in the time of the pandemic. And I'm just trying to illustrate those are the type of volatility events that you're left with, right? Now, on the other side of the spectrum, we have private investments. Now, with private investments, you are not investing into a market. Our firm is not listed on the stock exchange, for example. You are investing directly into the company, right? Now, there's some benefits here. When you're doing this, you are getting a much more controlled investment. And more importantly, you are getting a much more consistent performing investment as well. Our performance is not based on the market. We're not really influenced by what's happening in the market. There could be some good headlines, some bad headlines. That's not really what moves our needle or what drives the value of our investments. The only thing that drives the value of our investments is the assets that we hold within them. And as a firm, it is our job to make sure that we continue to increase the value of those investments, right? So that's really the goal. And because we are in that private sector, we are left with a much more robust investment, right? And depending on what type of investor you are, I feel like everybody's looking for that consistency in their performance. Now, I'll also talk to you a little bit more about the downside, right? Because I am giving you information, hey, good returns, stable returns, but we also are giving up a few things in the private side. Now, what you are giving away is liquidity. Going back to that example of stocks and mutual funds, if you wanted to enter or exit a position, you can do that very easily. You log into your brokerage account. You have no issue with that to offload thousands of dollars with a few clicks. Now, our investments don't have that same liquidity. And the reason why is our assets are real estate assets. And by nature, these assets are long term in nature, right? They have a long term horizon. And because of that, to align that long term horizon with our investors, we ask for a minimum holding period of 3 years. Okay. Now, given that minimum holding period of 3 years, it doesn't mean that you're locking in your funds like a GIC, for example. That's not the case. You still have some flexibility in the case of an emergency or for whatever reason you need to access your funds. You can still do so. However, you will be faced with an early redemption fee before that 3 year mark. Anything after that 3 year mark, you wouldn't be seeing any sort of penalty. So you do have some sort of flexibility, but just keep in mind that these type of investments are long-term in nature. If you're looking something to invest for 6 months, for example, this might not be the case, right? And as long as you're okay with that 3 year holding period and it aligns with your investment time horizon, you'll feel right at home here. We have some great opportunities, and hopefully we can showcase that here in this presentation. Now, here at Equiton, these are the three investment opportunities that we have, starting from our most conservative option on the left, going to our most aggressive investment on the right. You can really divide these three options into two investment styles. The first two options over here, these are what we call a fund style investment. Now, with a fund style investment, the two benefits that you're getting, the first one, you are getting a much more diverse investment. A single investment that you make gets diversified into multiple assets. The second benefit is that those assets are income producing assets. And each month they allow us to generate and pay our investors as well. So if cash flow is your goal and diversification, one of our funds could be a great option for you. Now, if you're an investor that has a greater risk appetite, that has a longer time horizon, and is okay with locking in their funds for a little bit, let's say 5 years or so, you can invest directly into a development project. Now, this is not a pre-construction unit that you're investing into. You are going to be the first investors on the ground, really. Your capital is being used to fund the construction of the project, right? So you're one of the first people in, and because of that, you're getting an investment that provides you with larger returns as well, as you can see from the chart over here. So those are the two investment styles that we have. I'll try to keep it very high level for this presentation and just give you really the gist of what we have here to
Are
at
there,
Equiton.
Sebastian, minimums that you have to in each project
Yeah.
to invest?
So starting off with our apartment fund, which is our flagship fund, the minimum is $25,000 to get started. All right. Now, with that, it makes it very approachable, right? You are not having to come up with a huge down payment if you were in the similar manner that you're looking to buy a home. So it is a way to diversify with a smaller amount. Our income and development fund is even more approachable, starts at $10,000. And lastly, our development offerings start at $25,000 as well. Now, the best part about our firm and about our investments is that you don't necessarily have to come up with cash up front to invest. We make it accessible by allowing you to invest with registered accounts. And I think that's a great point that a lot of people are interested in. Any sort of registered account, whether it's a TFSA, an RSP, maybe you have funds in a LIRA from a previous employer, you can make use of those funds to be invested into our funds, right? So this is a great option. A lot of people are not aware that they can use their registered accounts to invest passively into real estate. So this is the option for you. You're not withdrawing any funds, everything's staying within the RSP or the TFSA. It's not causing any taxable event. So it is really a great way for you to benefit, right? Especially if you already have existing funds there that may not be performing or just could be sitting there dormant in an account.
So sorry, Sebastian, what's the absolute minimum? Is it 5,000 or
10,000.
10,000? Okay.
So our lowest minimum coming from our income and development fund, which is the middle option,
Okay.
that is $10,000. Okay. And we also take all sorts of investments, whether you want to do a cash investment, maybe you have a corporation, a joint investment. Really, we're open to all sorts of investments here.
Okay.
Okay. Perfect. Oh, I'll dive into each of our options in a little bit more detail so you guys understand the strategies that we implement. Starting with our apartment fund, this is our flagship fund. It is the fund that our company started working with. And the strategy here is very, very simple. It is something that you, as real estate investors, might be aware of. We are acquiring rental properties. We're looking for properties that could be underperforming or properties that could be mismanaged. And we're acquiring these properties at a great valuation. And our job after we acquire them is to be able to improve the efficiency of how they're managed. Overall, in a long period of time, we're looking to improve the revenues as well as the valuation of those properties, right? So, one more time, aligning to that long term time horizon that we have. Um, And once we acquire those properties, really, you as the investor, you get to benefit from all the new acquisitions that we have throughout your time that you're invested. So you're not just investing to one property, you get to benefit from multiple properties. Now, currently in this fund, we have 41 properties. And the type of properties that we're acquiring here, these are not your traditional single family homes or duplexes or triplexes or anything like that. We are looking for medium to high density properties. So a single investment could give you a stake into a high-rise apartment building as well into full townhouse complexes. Those are the type of properties that we're acquiring here. Majority of the properties, as you can see from the map, are focused in southwestern Ontario. There's a few reasons with that. I'm sure you guys can all agree. Ontario is the economic capital of Canada. Not only that, the majority of the immigration that comes into the country stays in Ontario, right? So naturally, there's that demand for housing here more than any other province. Overall, we're spread across 18 communities, over 3,400 units to date. Our fund allows us to invest all over Canada, not just in Ontario. And as you can see from the top left, the image there, we do have some acquisitions in Alberta as well. So in 2022, we got some opportunities to expand into Alberta. We have two great properties there right now. And the outlook for the next few years is to continue to expand into the west side of the country. So definitely we've been able to grow from one property. Now we have over 41 properties. So as you can see there, the level of properties that we have here. And For you as an investor too, I would say it is a much more tangible investment. I usually talk with my clients, and depending on where they live, you might be near one of our properties, right? You get to drive by the properties, you get to see exactly what your investment's doing and what you're a part of, which is something that not a lot of investments can give you. So this definitely gives you that tangible feeling and be able to connect to that investment as well. All right. Now, the best part really for you as an investor, what do you get out of here, right? What type of returns are we talking about? Now, in this fund, we're targeting an 8 to 12% annual return. Now, that annual return is split into two parts. Approximately 6% of that annual return is paid to our investors on a monthly basis. So a portion of the proceeds that we get from the rental properties on a monthly basis, that gets passed down to our investors, right? As a quick example, if you were to invest $100,000, you can expect roughly $500 to be paid out to you each month, right? The remainder of the growth is coming through capital appreciation. So one more time, to align with our goals, our job is to be able to improve on those properties and increase their value. And over time, as we're continuing to improve on our portfolio, that would also affect the investment, your initial capital, right? So that will be able to grow with the fund as well. Depending on the strategy that you're looking to implement, or whether it's a registered account or a cash investment, you can have those monthly distributions paid out to you. So it can be going right into your checking account. We pay all our investors on a monthly basis. So it's on the 15th of every month. Like clockwork, we're very proud that in the history of the firm, we've never missed a distribution. And as a matter of fact, we've never had a negative month of performance, right? And that's really, if you guys get anything out of this presentation here, is that what you can expect with Equiton is an investment that gives you that downside protection no matter what the economic climate is, right? That's really the stability that we provide to our investors. This is not an investment that is going to double your funds in a year or two. That's not the case. This is just a stable, very boring, I would say, investment, but with true tested results, right? And I believe if you already are a real estate investor yourself on the active side, you'll feel very connected to what we offer here as well. The total approach, it's hands off. We're doing all the work for you. You just get to benefit from the returns that we provide. All right.
So here you're able to reinvest that monthly distribution. That's what it means with the DRIP 2% bonus?
That's correct. So if you are looking to reinvest, right, let's say right now you're not looking to receive those monthly distributions, there's a perk. Any new shares that you buy of a fund have a 2% bonus. So it's a little perk. It's not going to make or break your investment, but over a period of time with compounding interest, that's definitely going to make a nice positive effect. And if you want, it's not like you set it and it's set like that forever. If right now you want to have your monthly distributions, but maybe next year you want to have them off, all you have to do is notify us with 30-day notice and you'll be good to go to make those changes. So it's very flexible in that sense. All right. And to highlight through the performance, I'm going to show you this next slide over here. This gives you a visual of the growth of the fund, really. And like I mentioned before, you can expect a very stable investment, right? Upward trajectory, not a lot of movement, not a lot of volatility. That's really our strength, right? As you can see, even in the time of the pandemic, although our growth wasn't as high, as fast, however, it was still positive. And that just gives you the peace of mind of what type of asset you're adding to your portfolio. Okay, perfect. So just very quickly to summarize it, the apartment fund focuses into multifamily rental properties. That is the only asset class that you're exposed to here. The minimum investment starts at 25,000. The overall targeted return is 8 to 12%, with approximately 6% of that getting paid out to you on a monthly basis. This is eligible for registered accounts, TFSAs, RSPs, LIRAs. They're all welcome. And it is a great way for you to get started as well, right? Any questions that you guys may have at this point? Anything on the chat box? Are we okay here?
Okay for now.
Okay, perfect. So if there's no questions at this point, just one more time, we're going to move into our next opportunity that we have here at Equiton. We just finished talking about the apartment fund, which focuses into multifamily rental properties. The next opportunity that we have is the Income and Development Fund. Now, structurally, this works in the same manner as the apartment fund. The key difference here is that it is giving you exposure to three different asset classes. Now, these three asset classes are commercial properties, private lending, and developments. All those three asset classes are built within one fund, right? Um, I'm sure a lot of people might be interested in getting into commercial, for example, but it takes a lot more capital than your traditional rental property. And for a lot of people, it is very hard to get to. So we give you that exposure with a very low entry point, right? Now, the first two asset classes, the commercial properties and the private lending that we have, these are our income producing assets. These assets allows us to provide our investors with that same 6% monthly income, right? So you're still going to be getting that income just like the other fund. The sources that are just coming from two different asset classes, right? The interest payment that we receive from the private lending, as well as the rental income that we receive from the commercial properties. However, this fund, the overall targeted return is at 12 to 16%. And the reason why we're able to target a higher return is because we have our development here. Now, developments by nature are some of the most profitable investments that you can make in real estate. And because of that, we're able to provide those healthy returns as well. Now, we are not finishing a development every year. Developments by nature take roughly 5 to 6 years to be completed, depending on the project, right? But on average, that's the time frame that you're going to be expecting. What that means for you as an investor into this fund is that the years that we do not finish a development, your return is only going to be coming from the income producing side. All right. So it's going to be roughly that 6%. The years where we do finish a development, that is when you can expect that higher return of that 12 to 16%. So overall, in a long period of time, the average that you're going to be getting is that 12 to 16%, right? If you're somebody that maybe has a short-term horizon, only wants to invest for 3 years, I feel like maybe the apartment fund might be more suitable for you, right? Something that we know it's very predictable on how it's going to perform. But if you have a longer time horizon, let's say you want to invest with your RSPs or liras that you're not going to touch for a few years, then you will benefit from all the developments that we will have in this fund. I would argue that it is a great time to invest into this fund because we have a lot of developments in the horizon. In the year of 2024, we did not finish any development. We weren't scheduled to finish any development. But starting from 2025, we have some projects that are going to be starting to come to fruition as well. So you're going to be able to benefit from those returns.
And can
Hopefully,
you just start at any time, or is there like a cutoff
yeah.
time for projects, or can anybody just register?
The benefit in about these funds is that this is an open-ended fund. You can go in and out as you please, obviously with those limitations that I talked to you about before, but it is a much more open-ended investment. You are not investing directly into a development
Right.
project. You're doing it indirectly through this fund, and that's how you're able to have that flexibility. Okay.
Right.
And I'll give you the difference too a little bit longer in a little bit because I'll be talking about the straight development projects as well. All right. But before we do that, I want to give you guys an idea of what type of commercial properties we have here, right? Because when I'm talking about these commercial properties, what can you expect? Now, the commercial properties I can be a part of are these ones over here. So we have a commercial property that is occupied by the beer store in Wealth. We also have a completed plaza in London, Ontario as well. So it's fully occupied. I have some great anchor tenants like CIBC and the Wendy's. And those are really the type of assets that are providing us with that rental income each month here. And as we continue to grow the fund, the goal is to add more real estate assets as well. Just like we did with the apartment fund, we're going to be doing this with our income and development fund. All right. And for the people that might be asking, hey, what about the private lending portion? I would say that our private lending portion is a smaller part of the portfolio. However, for it to be known, we are not giving out loans to, let's say, a first-time home buyer to get their property. That's not the type of loans that we're giving out. These are institutional grade loans, multi-million dollar loans. I can give you a quick example. We might be financing or helping out a firm or a construction company for a very short period until they get their construction loan from the bank. All the loans that we provide are securitized, so there's always going to be collateral behind it, whether it's the property or the land parcel itself. So we always make sure that the risk is lower on those investments as well. Okay. And for the properties that are going to be coming up in the next little bit, I did talk about the property in coming up for completion in 2025. That is a property in Wealth, close to the beer store that I just talked to you about. But this project is expected to be completed in Q1 of 2025. We are building 96 stacked townhomes. The project is well under construction. Majority of the construction is completed. As a matter of fact, we're just going into the inside and the interior finishes of the project at this point. So right on schedule. It's looking to be a great project. At the end of the completion, it is estimated to be worth $61 million. So when those profits come in, our investor is going to be receiving a lump sum payment for the portion of that investment. And for you to also know the upcoming projects, we have a project in Etobicoke. This is 875 the Queensway. It's called Vicinity Condos. This project is an 11-story mid-rise condominium. The project is estimated to be completed at the end of 2026. So another project that you can expect to have good returns on. And then we have another project in the east side of the city, in the Scarborough Bluffs area. This project is called Sandstones, and it is another boutique style condominium, 12-story condominium, roughly 320 units in this project. This is estimated to be completed at the end of 2027. Right? Any questions with everything that I've talked about so far? To summarize, right, this income and development fund is giving you the best of both worlds. It's giving you that income producing side as well as the exposure to developments without having to lock in your funds into a single development project. Minimum investment here is $10,000. The overall targeted return that you can expect is at 12 to 16%. However, it's still going to be giving you that 6% in monthly income. And you can use your registered accounts just like the other fund to invest as well. So TFSAs, RSPs, they're all welcome here too. Okay. Perfect. So hopefully all that is clear on the structure of that fund. Now that we talked about the two options here, we'll go into our third investment opportunity. Now, this opportunity, like I mentioned, is for the investor that has a higher risk appetite, that might be already exposed into developments or into real estate. These type of investments do not have any liquidity. All right. So you're not going to be expecting, even if there's an emergency, to receive your funds. So you have to make sure that any funds that you put into these developments, you're not going to need. Right. So that's one of the things. These do not provide any monthly income also. And the investors are only going to be getting their money back as well as their profits once the project is completed and sold. Now, the current project that we're raising capital for, it is called 1099 Broadview. And 1099 Broadview is actually the address of the property. We feel like the area, the Danforth area that this project is located in, is a very sought after area. And that's the reason why we've also done our branding with the address, right? People get to recognize the Broadview street. And depending on where you are in Toronto, you might be familiar with the Danforth Greektown area. Now, this project, we are looking to construct a 12-story condominium. As you can see, the theme here is to keep it in those boutique style condominiums. We've noticed that a lot of people are more attracted to these type of condominiums. They don't really like the high-rise buildings that have a lot of floors, not that necessarily bad, but also because on a much more community basis, people like a smaller building, I would say, right? That's the trends that we've seen. Now, we're building approximately 355 residential units here. The project is estimated to be completed in 5.2 years. That's our time frame, giving you an exit date of 2029. So that is what you can expect for the project to be completed. At the end of the project, this is going to be worth approximately $386 million. So that's really the value creation that we're having here. And the minimum investment for you starts at 25,000. So you can get started with as little as $25,000. The returns that you can expect, there's going to be a 20% per year return roughly, which is going to come to 103%. That is our target at the end of the project. We like to split up into a yearly return so you're able to compare it to other investments. But one more time, the returns does not get paid until the completion of the project. This is a great option where you can use your registered accounts. A lot of my clients use their TFSAs, for example, because on a tax perspective, these developments get taxed as regular income. So once you're completed and your payouts are given to you, you want to be able to capture as much of that growth, right? So this makes a great opportunity for you to use your registered accounts. To have an idea of where the project is located, it's a aerial view of the Danforth area. We feel like we are very well positioned here based on accessibility. When it comes to developments, I'm sure you guys see a lot of projects coming into market. And with developments, there's usually a few things that developers look into. And one of the main ones is accessibility. They have to see if the project is going to be close to a major transit hub or a major highway, right? That's usually what people are looking for, transportation. The best part about this project is that it gets the best of both worlds. It's right off the Bloor and Danforth line, and it is also right off the DVP. So you can get on the highway in 15 minutes, you can be in the downtown core. So accessibility is great. We're attracting a lot of people, maybe people that want to be close to downtown, but not necessarily live in the busyness of downtown. And it's also people that like nature. We have great parks along that area as well, which is something that is very hard to find here in Toronto, making it a very, very attractive opportunity for investors as well as for end users too. And lastly, very briefly, I'd like to share just the timeline of this project for anybody that may not be familiar with developments. Um, this is something that you can expect with any project. We start with our acquisition, followed by that is the site plans and approvals. This is where we get our zoning. Usually that's what takes the most amount of time. I'm sure you guys understand that getting permits, it's not the fastest process here in Toronto, a lot of red tape. Even getting a passport here takes forever, so you can imagine how these approvals take. But once we do get those approvals, we can start with our pre-construction sales. And that's estimated to be in 2026. And once we hit a certain percentage of those sales, we're able to start the pre-construction. And that's going to go all the way till 2029 when we're looking to have the occupancy in Q1 of that year. Right? So I don't want to get into too much details. I just want to give you guys the overall highlights. The
Sorry,
whole
Sebastian,
purpose.
one project ends, then
Mhm.
at that time you are going to, can you reinvest into a different one? How does that work?
You can. Once the project is completed, you are going to be receiving your capital back as well as the profits.
Okay,
Really, it's up to you if you want to roll it over into another project.
okay,
The goal of the firm is to always have a project available. And
okay,
that's one of the differences with our funds. These are closed-ended investments. We have a certain amount of capital that we need to raise for each project. Once we raise all that capital, we close the project.
right,
We do no longer take any more investors,
right, okay.
right? Sorry. So for example, the other projects that I showed you in Etobicoke and in Scarborough, those are fully funded. They're on their way. One of the project in Etobicoke is actually is starting its pre-construction sales. So we're just launching into market. And the project in Scarborough as well is fully funded. We're just finishing off with the permits there, right? And really the goal of the firm, as I mentioned before, we're fully integrated in all aspects, right? Not only do we have the responsibility with our shareholders, but we also have the responsibility with our tenants. we also have the responsibility with the end user that is looking to buy their home. So really, we're trying to capture all sorts of investors and people that want to benefit from real estate opportunities, right? It's a one-stop shop, really, for any real estate or passive investment that you want to do. Okay. So perfect. I'm not sure if anybody has some questions. Is there the chat box
I don't see
here?
any in the chat box, but I just wanted to ask you,
Go
so
ahead.
in the beginning, you did mention that this is a private investment, but this is regulated by the OSC. So could you just touch on that a little bit for everybody worried that this is a private and not a public?
Of course, yeah. So although we are a private firm, we're still regulated, right? So we are registered with the Ontario Securities Commission. You guys can search up our license, right? Search up my license. This is you. I want to make it clear. You're not dealing with a small group of people that are gonna get your capital and then go buy a property. That's not the case whatsoever. We're a fully established firm. We have over 200 employees across the firm, and we do manage over $1 billion in assets, right? It's You're not dealing with a small player by any means. For anybody that would like to visit our offices as well, we have one of our main office, our head office, really is in Burlington. Majority of the team is there, but then we also have another office in downtown core, right in the financial district, right? So I just want to make it clear that we are very transparent. And I would say that transparency and the integrity that we work with is a big reason on why we've been able to grow at the pace that we have, right? We didn't get to over 15,000 investors overnight by taking shortcuts. I would also like to highlight something else now that you mentioned that. Although we're a private firm, there's certain things that a private firm does not have to do in comparison to a public company, for example. If somebody wanted to invest into Apple, a public company, Apple has to disclose financial statements by law. That's part of the mandate that they have to follow to be able to be listed on a public stock exchange. Private firms, on the other hand, they do not have to do that. We're not mandated to share any financials by any means. However, we take that extra step. We provide all our clients or all our prospects with access to our audited financial statements. You can take a look exactly of the health of the funds. You can take a look at the breakdown of all the properties, all the mortgages behind them. That just gives you one more time an idea of how we work here, right? It is very transparent, and I would love to share more information if anybody that's interested on a one-to-one basis of exactly how and what properties we hold.
No,
But
so
thank
that's
you for that
amazing.
question.
So the investors are essentially in part of the whole process. We're along there.
Exactly. You are an investor, right? By you investing to one of our funds, for example, you become an indirect owner of those properties, right? The fund owns those assets and you own a portion of that fund, right? So, and that's why I mentioned it is a more tangible investment, right? I'll make that comparison again. If you have some money at the bank sitting in a mutual fund, you might not even know what's happening with those funds, right? You might be okay, it's sitting at the bank, maybe it's being put somewhere, but with our investment, you actually get to be a part of it, see exactly where your money is going to. And we make it a great point to always communicate with our investors anytime we reach a milestone or even on a quarterly basis. We provide all our investors with quarterly reports to make sure that they're aware of exactly how the firm is go or how the fund is going. So transparency here is key, and that's part of the reason why we've been able to grow at such a pace.
Okay, that sounds good.
Perfect.
Thank you so much, Sebastian, for your presentation. I see your contact information is up there if anybody
Exactly.
wants to just take a photo screenshot. But if anybody has any questions at any time, you can always call me. And I can
Ex-
forward it to you. Yes.
Exactly. Yes, I would recommend anybody that wants more information, just contact Mandeep. I appreciate Mandeep for the time here and the opportunity to talk to your network. Or if you know of anybody that might be interested, just pass that name to Mandeep and we'll be able to assist you guys here, or just more on an educational basis. I love talking about real estate.
Right.
Anybody that wants to just have a quick chat of how the market is doing or what they think,
And
we
just
love
for more
to.
information, it's like the procedure. It's not, they'll speak to you and see even if this is a right fit for them or not. Right.
Of course, right? There's no obligation.
Right.
Myself, I carry myself like an educator before anything.
Mhm.
My job here is to provide you with information, specifically because a lot of people aren't aware of alternative investments, right? They might not even know. So my job here is to educate you, whether it's a fit for you or not. That's part of our discovery to see if it actually makes sense to add it to your portfolio, right? And two, once you do become an investor, the steps are very, very easy. The onboarding is very seamless. I take care of all of that for you. So you'll have a direct relationship with me. I make sure that I do this very efficiently. Everything's done electronically as well. So the signatures and documents get prepared and sent via DocuSign. Once you do become an investor, you will also have access to our investor portal where you can log in, take a look at your account. But then you also have myself to be able to assist you with anything that you may need.
Right. And if somebody was transferring from RSP, all that you can.
All of that's taken care by us. So, like I said, it's very easy. I would consider a much more intimate investment relationship, right? You're not dealing with a big bank that if you need help with anything, you call a 1-800 number. You don't even know who you're talking about. They don't know your situation. So we make it much more intimate, and I feel like a lot of investors appreciate that.
Absolutely.
Of
Yes.
course. Yeah, but is there any other questions?
I don't see any more. I'm not sure if the chat is
No
even
problem.
disabled or whatever, but if anybody has any questions, you can, reach out to me. And I thank
Exactly.
you so much, Sebastian. It was a very good presentation. We learned a lot today. Thank you so much.
I appreciate that. Thank you very much for the time. I wish you guys all a great weekend. Enjoy the Saturday. I believe it's going to be nice and warm today.
Sounds
So
like it. Yes. Thank you. Thank
enjoy,
you to
enjoy
everybody
the
who
last
came as well
of the Saturday.
online. Thank you so much.
No problem. All the best. Thank you.
Okay.
Take
Bye.
care.